Market mayhem as oil price showdown triggers a major sell-off and an emergency halt to trading. All three of the major averages suffering their worst point decline ever. The Dow plunging more than 2,100 points at session lows before closing down 2013. That's down 7.8%. We are just shy of bear territory by a couple of hundred points. And oil suffering its largest one-day decline in nearly 30 years as the coronavirus financial contagion intensifies. Hi, everybody. Glad to be back. This is Bulls and Bears. Glad you could join us. I'm David Asman. Joining me on the panel today, Gary Kaltbaum, Scott Martin, Liz Peek, and Zachary Karabell. Let's head straight to Christina Partsinevelos at the New York Stock Exchange. Christina, was it oil price? Was it the oil price crash that set this off?
Really, there's several factors. A lot of it has to revolve around not necessarily the virus itself, but the panic around the virus, as well as oil. Oil just added to that catalyst because it's so difficult to price in the economic impact of what this virus is going to do to companies across the board, which is why you saw this massive sell-off today. The fact that we had a circuit breaker halt all markets when we saw it fall down 7% early on in the morning, that actually helped liquidity in the market. But nonetheless, you mentioned that, David, you're seeing across the board everything over 7% lower for the day. Oil hitting a low we haven't seen since 1991, and that really did hurt shale producers across the country, across the globe. And it also shifted investors to move their money into safer bets like 10-year Treasury bonds as well as 30-year Treasury bonds. We saw the 10-year drop to a low of 31 basis points. That's 0.319. We're not even talking in percentages anymore. And then the same thing for the 30-year yield. You look at the 30 yield, it fell below 1%. These are numbers we have not seen ever for the 30 years, so we could possibly see some more refinancing going on. And we can't predict, right? But you have all these economists and analysts that are weighing in, putting out a note. And so Morgan Stanley, they put out a note talking about a potential recession in the next 2 to 3 months. They listed various reasons like the panic from consumers, lower oil, that could stop businesses from investing. Like JetBlue said that they were going to be doing a hiring freeze, and then possibly some layoffs within the energy sector. And then you've got Goldman Sachs, an economist over there, said that they believe the Federal Reserve will be cutting interest rates at the next meeting on March 18th. You have retailers that are suffering from shortages right now. Target today said that they're going to be limiting the sales of disinfectants at their stores because there's so little available. It's completely sold out at Walgreens, Costco, you name it, even Walmart. And so we're seeing empty shelves across the country. But to bring it full circle and pretty much throw it back to you guys in the studio and the panel, a lot of this does revolve around how companies are being proactive. You have people saying, I'm going to work from home, or my company told me I can't come in today. You have schools closing here in the United States, more and more universities, trips getting canceled. And so that's just adding to it. And it's so difficult to price in this economic impact right now. So I'll give it to you guys.
All right. By the way, I remember 1987. It's extraordinary how quickly we can come back with even a worse point loss percentage-wise than we have today. And we are an extraordinary resilient economy right now. So we're in a good shape to weather this storm. Thank you, Christina. Speaker of the House Nancy Pelosi is blaming the stock market's plunge on the president's handling of the outbreak. Take a listen.
Well, it's very sad, but I believe what we know about the Dow is that they want certainty. They would have confidence that there is a plan. And I think that what is happening there is a reflection of the lack of confidence.
So, Gary, is that really why traders sold off today?
Not in the least. And look, there's a combination. It's Murphy's Law right now going on. First off, the market in 14 months was up 38% on the Dow, 58% on the NASDAQ. We were going to correct anyhow, but then the virus hit, and that has been the catalyst. And may I state this, business after business after business, industry after industry after industry are pulling in the reins. When that happens, we go from a virtuous cycle to more of a vicious cycle, and it's weighing on economic growth. You throw in what happened with oil today and what Saudi Arabia did, which basically is an attack on our oil industry and the worry about all the leverage that all these oil companies have, and you end up with what you are seeing. If you're going to blame this on the president and give him the blame on the 15,000 points to the upside, guess what? It's an election year. Unfortunately, this is going to be expected. I wish all parties would get into a room and get a little kumbaya because this is affecting all the citizenry around the country.
You better roll out the liquor cart for that one, Gary, because we're going to need some time and we're going to need some hard feelings and some broken hearts. I like how you said it, though. Virtuous to vicious. But guess what happens after vicious? Virtuous again, hopefully. And that's what I believe, David, as you alluded to about this economy, about businesses, about this mobile work. It can happen. It can be done in the sense that businesses today, technology, these little things called iPhones, this nice little laptop I have here, things can work. In fact, Slack, which is symbol work on the stock exchange, is a company that facilitates kind of business-to-business work and stuff. So this can happen. This isn't that big of a shock.
But, Liz, we do still have factories in this country. We do still have office buildings in which people need to be there for various reasons. What happens if they become quarantined? Won't that lead to at least a temporary shock to our economy?
It will, but I really think that's unnecessary. I mean, I really think the health issues here have been exaggerated, but I want to go back to 1987. I want to go back to 1987, and also 2000.
I back there too. That was a great time in my life.
And also 2008. There were really serious underlying credit problems in the economy. We all knew that, and yet people kind of puttered along, kept driving the markets higher in spite of that. There is no kernel of instability in this economy right now, and I think really what we need, Nancy Pelosi is obviously trying to score political points, but we do need the private sector to come forward and say, here are the risks, here are the realistic risks, not what someone's going to tell you on MSNBC or whatever.
Right.
And here are what we're doing about it, and our economy is going to be just fine. I mean, I find this overreaction is ridiculous.
You came in here steaming today.
I've never seen her like that before. I mean, I want more of that.
And I have one more thing to say. I apologize for taking so much time. But in Russia, let's talk about Russia. They did this. They basically said no dice to Saudi Arabia.
We've got a whole segment about that coming up.
All right.
So just hold your fire on that one.
Bank that until
Zach,
later.
you know, a lot of people are saying, don't panic, don't panic. Just you have a great piece in Time Magazine where you say, go ahead, panic, but don't act on the panic. Plan out the scenario. Think in your mind the worst panicky situation, and then do what?
Yeah, look, I mean, there's a tendency in the financial media and in life at these times for people to say, oh, no, it's not a big deal, don't panic. Look, it is a big deal, and you should allow for that human reaction, whether it's justified or, as Liz said, whether it is completely unjustified. We're in the grip of something globally right now. Best case scenario, this passes. It's already cresting in China. It's been about 4 weeks. And to some degree, what's going on right now is like a sucker punch. It would have been totally reasonable 3 weeks ago to assume 2% economic growth in the United States, modest profits. You know, we could argue about whether that was going to be an over or an under, but it was within a range that made sense and was realistic. And that has to be reset right now. And it may be totally wrong that it has to be reset, but the globe...
Right.
So, I
have to add...
The globe is just, it's taken a big time out right now, and we're not used to this.
Go ahead, Gary.
Look, we do not know what the outcome of this virus is just yet. We want to believe the best, but we just don't know. We're not going to know a few months from now. But I have to make the statement here, the fact that if a cruise ship does not go out, all those people that were going to get to the cruise ship on Ubers are not going to take the Ubers. They're not going to get on the cruise ship. They're not going to take the tours. They're not going to take the airline to get to the cruise ship. And that's what I mean by a vicious cycle. The more and more we hear of that, the more and more companies hear of that, the worse things can get. And let me add in the other part of the equation. The country has $23 trillion of debt. Massive leverage is out there. You say, Liz, that we don't have anything that's really lurking. There is a lot of leverage, and I must tell you, the words love and hate, fear and greed in markets are very close together, and you're seeing the outcome of how close together they are. I'm always hoping, but I do worry about all this, and central banks are culpable for all of it.
Mention Liz. Go ahead.
Well, okay. So, I mean, we talk about the federal deficit all the time on this program. The federal deficit can be fixed. I don't view that as something that is foreboding. Or it can't. All we have to do is have a little bit of discipline in Congress and in the White House. I admit that's far-fetched. I know.
Never.
But
that's the liquor cart I was talking about.
But it can be fixed. I don't think that's. I don't think that is a existential threat to this economy.
Well, here's the thing. The one reason that debt has been so prevalent, and to use a word fun to have, is because it is darn cheap.
Yes.
And that's a scary thing, too, Gary, to your point, because when debt's cheap and you can get it, yet you go and get it. But I will tell you, Gary, to your points, too, about all these things about the Ubers and the flights and the cruises, to what degree, in the fact that we've seen such a massive sell-off in the S&P, one of the fastest ones of any corrective period, is that already priced in?
Sometimes when it falls this fast, it comes back fast.
That's right, because it's already discounted.
By the way, you don't need a microphone.
I know. He doesn't need a microphone. No, we have a microphone.
We got an excited crowd here, folks. We hope you're enjoying things. Well, meanwhile, Democrats are attacking the president for his response to the growing number of coronavirus cases